Should you leverage loans to launch your business? It's a question that's probably crossed your mind, especially if you're dreaming of building your own empire. After all, you've got the vision, the passion, and the hustle, but maybe not the cash to make it all happen. So should you take the plunge and borrow money to get things moving? Let's break this down, because this decision isn't as simple as it seems. First off, let's talk about risk. When you take out a loan to fund your business, you're betting on yourself. It's like placing a wager at the casino, but in this case, the house is your future. Sure, a loan can give you the resources you need to scale quickly, but if things go south, guess who's on the hook? That's right, it's you. You'll be paying off that loan no matter how things go. So should you do it? Let's dive into the pros and cons to give you a clear picture. Pro number 1, quick access to capital. If you don't have investors or deep pockets backing you, loans are one of the fastest ways to get cash in hand. This means you can buy inventory, hire staff, or upgrade your equipment without waiting for months or years to save up. If your business idea has strong potential, borrowing money could give you the leg up you need to turn that idea into something real fast. Pro number 2, retain control. Unlike venture capital, loans don't come with a board of directors or shareholders who want a piece of the pie. You're in control of the business decisions, the direction, and the growth. No one's breathing down your neck trying to influence your moves. It's all on you. But here's the catch. Loans come with responsibility. And not just any kind of responsibility, financial responsibility. Con number 1, interest and repayment. Loans are not free money. No matter what, you'll have to pay that money back, with interest. The rate you get depends on your credit score, business history, and the type of loan you're taking. That interest adds up, and over time, it can end up costing a lot more than you originally borrowed. Plus, depending on your loan terms, repayment could be an ongoing burden on your cash flow. For example, let's say you borrow $50,000 at a 6% interest rate, and you have a repayment period of 5 years. At the end of those 5 years, you could end up paying $10,000 in interest on top of the principal. Con number 2, risk of default. This one's a biggie. If your business doesn't do as well as expected, you might have trouble making payments. Missing payments can hurt your credit score. And in the worst case, you could default on the loan, which means your business assets could be seized. That's a nightmare scenario for any entrepreneur, and it's something you need to seriously consider before borrowing. So, how do you decide whether it's right for you? First, you need to ask yourself, can your business generate enough revenue to cover loan payments and leave room for profit? If you're just starting out, that might seem like a big leap, but it's crucial to know whether the business model can sustain the debt. Next, let's look at the numbers. Calculate the loan amount, the interest, and the repayment period. Then compare that with your projected cash flow. Are you confident your business will hit those numbers? If not, maybe it's worth considering other options. Now, here's the thing. Not all loans are created equal. There are different types of loans, and understanding what you're getting into is key. SBA loans. These are government-backed loans with favorable terms. They tend to have lower interest rates, but the process to get approved can be lengthy. Still, if you qualify, they're one of the best options for business owners. Bank loans. Traditional bank loans are another route, but they often come with higher interest rates, stricter qualifications, and require a personal guarantee. Lines of credit. These are flexible, revolving loans that can be used for working capital. They're ideal if you need to manage cash flow or cover short-term expenses, but they can also carry higher rates. Real-world example time. Let's take Noah, for example. Noah wanted to launch his dream tech startup but didn't have enough capital saved, so he decided to take out an SBA loan for $100,000. After a year, his product gained traction, and the revenue flowed in. He paid off the loan in 2 years, and the interest was manageable. Fast forward to today, and Noah's business is thriving, all thanks to that loan. In his case, the risk paid off. On the flip side, Amelia wanted to open a high-end boutique in a competitive market. She took out a loan to cover inventory and store costs, but unfortunately, sales didn't pick up as quickly as she'd hoped. Amelia struggled to make the payments and ended up defaulting on the loan. Now, she's left with high debt and a shuttered store. The difference? In Noah's case, his business was scalable and had a high demand, which helped him pay off the loan quickly. Amelia's business, on the other hand, wasn't as strong in the beginning, and the pressure of repaying the loan added to her financial stress. So how can you avoid Amelia's fate? Make sure you have a solid business plan. You need to be realistic about your cash flow, and you should have a cushion in case things don't go as planned. What's the takeaway here? Loans are a tool. Nothing more, nothing less. When used strategically, they can help you build your business faster and keep you in control. But you've got to do your homework. Assess your risk tolerance, understand the loan terms, and ensure your business is capable of generating enough revenue to cover the debt. This is your money on the line, and it's vital you make the right call. If you're unsure, it might be worth talking to a financial advisor who can guide you through your options. Remember, always consult a certified financial professional for personalized guidance. So, would you leverage a loan to launch your business? Drop your thoughts in the comments below. I'm curious to hear your take. And hey, if you're diving into the world of business finance, hit that like button and don't forget to subscribe. You don't want to miss what's coming next. Looking to take your business finances to the next level? Well, there's a video right here that can help you with exactly that. Click and watch now.